Everyone, I'm just waiting a few minutes while everybody is coming in. I can see people coming in and joining us for this evening's Trader Talk Radio. There we go. I'm going to get going. Okay. Hi, everyone. I am Ainslie Club. Welcome to Trader Talk Radio for Sunday, the 7th of May, brought to you by Actions to Wealth. Hello there. Hi, guys. Thanks for your comments. I'm just going to share a screen and we're going to get underway. So where are we? Screen 2. And hopefully you will see a nice blue screen that says 7th of May, market review. And I hate how I lose absolutely everything, chats and everything. Darn it. There we go. That's better. Okay, so let's get going. What a week, hey? This week was short and sharp, but really, really punchy. We had a lot going on out there. Considering Monday was, excuse me, Monday was a public holiday for Europe. It was May Day, let alone a coronation day on yesterday. Yeah, we certainly have had an interesting, really, really interesting start to May. Sell in May and go away, as they say in the classics. Not this week. It was just an utter nightmare. So we can see we start with Monday being May Day, Tuesday, Australian dollar. Did that go on a bit of a rocket launch because there was a surprise interest rate hike of 25 basis points. It was not expected. It was not factored into the market. In fact, it had 100% of the economists and analysts that they interviewed prior to the RBA, the Reserve Bank of Australia, meeting on Tuesday at 2:30 saying 100% definitely not a rate rise. But our governor, Philip Lowe, Reserve Bank Governor Philip Lowe, decided that a good 25% basis point rise should help bring inflation under control. So that sent the Australian dollar absolutely soaring. But not for long. It did have a bit of a bounce back and a retreat when it just went, oh dear, this is the reality of what's going on. But the Australian dollar was sort of caught up definitely with what else was happening in the rest of the world. We saw yet another bank, another regional bank, another regional bank in the US. And just to distinguish between the regional banks in the US and the major banks, they fall under different legislation and have different requirements and different restrictions around what they can and can't do. The problem is with regional banks, they stump up the loans for the majority of small businesses and mainstream business in the United States. So when we talk about regional bank, are we talking about something really small? No, we're not. We're talking about something that's going to really impact the S&P 500s because it just impacts all those businesses. Okay, so that's why a banking collapse, another bank collapse is important and needs to have a bit of a closer look. Wednesday, FOMC, I actually slept through that. I was exhausted by the time, but you can't be there for all of them. We saw an increase in the interest rates, now sitting at 5.25%. Where the markets got twitchy, it wasn't so much the interest rate. It was the interest rate increase was actually expected. Where it got twitchy, where the markets really, really got upset, there were two things he said. One, Powell, he being Chairman Powell, he sent the markets low when he said that the banking system was resilient and was under control. Clearly it's not. Clearly we can see that there is something really not good going on here with the increase in interest rates because this is where they're all coming undone. And the second thing he said that actually just blew the market away because there are some of the major analysts from Goldman Sachs, JP Morgan and a few others are actually looking for Citi as well, Citibank are looking for a cut in interest rates. He has left the door wide open for another interest rate increase coming along. He's not looking at cuts. He's looking at the data. He's saying that whilst that some of his staff disagreed with him on this one, he's still going with the data. He's still saying there is a possibility that we are looking for another interest rate rise coming along. So that's going to put the banking system under more pressure. It's going to put the cost of living under more pressure. It's going to just really, really slow things down. Fear of recession, absolutely. And I'll come to that when we review gold and oil, how that has had an impact mainly on oil. Thursday, the Eurozone raised interest rates. Again, it was expected, but they raised it 3.75%. And on Friday, oh my gosh, we had non-farm payrolls. It was expected to be 181,000. It came in at a thumping 253,000 jobs created, which was just incredible, right? So it doesn't stack up with a few of the other pieces of data that seem to be coming out. Should have got a bit of an inside running on that ADP that came through on Thursday night in amongst after the interest rate increase. The poor markets have had a lot to absorb this week. It really has. So let's have a quick look at the charts. So that's what's happened from the fundamental side of things. Look at this this is the US dollar. This is chart, 4 hour is on the left hand side, on the right hand side is a daily chart. Now, when you're looking at a daily chart, yes, it's had a 4 down days in a row, and that's not bad considering it was a short week for the majority of the trading community. But if you look how it got there, we're up and down and up and down, and we're still trading. If you look very carefully, we're still trading within a range that's been in effect from pretty much the beginning of April. Let's have a look. The dollar yen. Dollar yen had a bit of my 4-hourly chart resembles something like a roller coaster ride, doesn't it? It went up, it went down. Again, double top here, there from the beginning of March to where we are at the beginning of May. I'm trying really, really hard to try and find something, and I was trying to find some good setups to show you. But at the moment, I think what we have had is 2 huge moves within the week with a lot of really significant information coming out. I wouldn't be surprised if we see next week just trying to absorb what has happened. If you go to weekly charts on any of your majors, you'll see that there is nothing really substantial except for a lot of headaches as they absorb the market news. The euro, here we go. Again, look, this is still trading within a range, even though we have the 20 and the 50 and the 100 EMAs all moving up to the top right. Do we have anything significant happening in the price action? No. How did we get to that situation? You look in the 4-hourly for the week, again, an absolute whipsawing of information has given prices going all over the place. The Australian dollar, I was showing you here. Let me show you. As soon as that Australian dollar, that interest rate increase was offered up on Tuesday afternoon, the market took off and then retreated again, but then was subject to everything else that was happening in the market with non-farm payrolls. And as you can see, we've got the non-farm payrolls that goes back and then it goes back up again. So the Australian dollar, again, bounced off this bottom of S1 from the previous month's support and is now sitting at R1. So a lot of the majors, as I said, have had a bit of a whipsaw effect on what's going on as they've absorbed a lot of information and a lot of intense information. It's all been quite significant within itself. So having to try and deal with that, trading that, you can see some of the 200 moving average for me on my 4-hourly chart, almost flat. But that's not surprising given the information that we've had to do. So let's go and have a quick look around oil. Oil had some really interesting bits and pieces going on, I've got to say, and its main theme at the moment is gloom and doom. So as a feeder from what's happened in the financial markets, oil is looking at, hey, we are going to be looking at some kind of recession. That means a restriction and a retraction in the economy, slowdown in businesses. Businesses aren't going to be producing as much because demand for the goods and services is going to be restricted. That whole cycle is what we're seeing on the oil chart. So the oil chart, it came off 10%. So in terms of oil and oil trading, for it to come off 10% week on week, so just in a week, that's quite significant. All right. So it's one of the worst weeks we've seen in recent times. It is the risk of recession, the geopolitical unrest that really overtook the market. And there were some significant things that actually happened this week, which should have pushed the price up, and we didn't see it. So there was a small rebound on Friday morning. But what's pushing this bearish sentiment in the markets at the moment? Let's have a look at all the major stuff that's happening. It's sort of like the recession fears. It's the higher interest rates. It's the US banking crisis contagion. They're not sure where this is going to go. As I said, the US banking crisis and the fact that we've had, it's the regional banks, not the major banks. The regional bank is going to hit the hardest in the back pocket of a lot of these businesses. Therefore, they're going to have a significant and an immediate impact on energy prices. The other thing that came out during the week was the lackluster industrial figures from China. What a surprise. That has made it all very, very ordinary. So let's just pop over to a chart. The thing with the chart is we've seen this major push down from about the middle of April. And you can see from this week, look at this. This has been quite we haven't seen it down around $63, which is where it landed. It bounced off anyway. We haven't seen it that low for some time. But what we've got here, and what I've got circled is on a technical setup, we have got a ringed low. Technically, I see this on a daily chart. You have a look on the weekly chart. You have a look on the monthly chart. However, I like that kind of setup. That is one of my favorite setups to see, is a ringed low or a ringed high. However, I'm a bit nervous about that setup because if you have a look, this is a weekly. Whilst we've got a double bottom and we've got it sitting on the purple level here, we've got a really, really strong level of support. So we've closed below that support. I'm a bit nervous. We are still in a downtrend for me technically on a weekly. So for me technically, by the way, a downtrend is the 20 below, the 50 below, the 100 below, the 200. So that is short term because my 200 is sitting down there and it's bounced off that. We've got it sitting really ramrod between a 50 EMA and a 200 simple moving average and a significant level of monthly support. I'll just go back to that chart. Excuse me. We also got a DI minus saying, look, this is not ready for an upturn. So this is a weekly chart. As you can see, we've gone sideways for months. Okay. We've been up, bounced off the 50 and we've come back down. I've got the two big arrows because I've got a double top there. Double bottom. Ring low there. Technically, do we have the right setup? Can we trade it to the long side? I'm a bit nervous on that. And this is, have a look at the seasonals for May. This is West Texas Intermediate crude oil, US oil. It is not Brent. So there's the sell-off that we've just seen for the first week of May, but then May just goes pretty much sideways with a bit of a fallout towards the end of May. So I've put the seasonals, a technical setup, and the fundamentals. Now, the fundamentals, just to go back, and it got lost in all the news and all the hype and all the noise of the FOMC because it came out at a similar time, or that same time period, was the US inventories are running short. they are at a negative 1.3 million barrels. They're running short. That does pose a little bit of a problem. You would have thought that that kind of news should have sent sent oil flying. It didn't. There have been a few other incidences as well. Iran has hijacked, there was some hijacking of a tanker in one of the straits, and Iran has withheld a couple of tankers and not letting them be released. So there have been some other little issues. I think a big one is to just see how we go with oil. June 4, OPEC will meet again in Vienna in person. They hadn't met. They did a teleconference. This time, apparently, they are meeting in person. So that would indicate that they're not happy with the price of oil at the moment or where it's going or what it could potentially do. So June 4 is a meeting in Vienna for OPEC to discuss. No doubt they will more than most likely cut production. So that will have a huge impact. So like I said, you try and combine fundamentals with what is happening. The fact that there was no impact from some fairly significant news that should have sent oil higher, it didn't. My technicals are there. I can see it. I've got a seasonal chart telling me nothing much is going to happen for the rest of May. I'm being really careful with oil. It brings me to gold. Again, gold is now giving me an incredible ringed high. So oil gave me on a technical chart, it gave me a ring low, and now gold has given me a ringed high. I cannot believe how much it has moved, considering where the previous week was just giving me heartburn because it just went sideways for, pretty much since the middle of April. But again, that chart doesn't actually reflect the nightmare of trading gold this week has been. So we almost hit all-time highs for gold, and that was because of the FOMC, flight to safety. Again, the banking collapse, another flight to safety, and the NFPs, which brought it straight back down again. So looking at gold, if you have a sore neck, I understand. It is just all over the place. Where it's going to next week, I just think, as I said, you can see the week before it was just so quiet. Everything, all the EMAs, when all the EMAs are lying flat, by the way, you should not be seeing, and that's backed up as well by the MACD. The MACD indicator being the lowest indicator there in my subchart. You'll see there was just nothing happening. It's just going in one direction, then falling back in the other. That seems to be pretty much across the board. So if you are seeing setups and you like a setup and you've got confirmation, at the moment, I would be doing nothing more than looking for nice tight stops and an easy, quick profit-taking exercise. I think we're going to end up with a similar week to what we had, not this just last week gone, but the week before, whilst the market is all absorbed here. And I think that's, I think that we can confirm that with the seasonals on gold. And one of the things I do pick is pre-election cycle. So 2024 being an election, and you would have seen when I pulled up the oil seasonals. Here we go again. Look at that for May. We're not looking for anything significant to happen in May on gold. It's not really until we get to the beginning of August that we can really look for something to get our teeth into on a good move. At the moment, as I said, the seasonals, backed by the technicals, backed by what's happening in the fundamentals, I think we could all agree that anything that you do trade might have to come off a larger time frame, and you're looking for neat setups with tight stops and really good, easy 2-to-1s, and that's about it. And just get out at support or resistance. Okay, that's me for this week. Does anybody have any questions? If not, okay, all good and clear. Thanks, Catherine. Thank you. Okay, with that, I'm going to thank you very much for your attendance tonight, and all the best and happy trading. We'll see you soon. Bye for now.